Hi, this is Charles Kelly, Money Tips Podcast. I wanted to spend a quick 10 minutes today going through the mortgage market and give you an update on what's going on since the recent rate rise that we talked about last week. So let's have a look at mortgage rates themselves. Okay, you should be able to see this now. I've got an example here. This is on one of the comparison sites. It's actually on Money Saving Experts comparison site. I've just chosen this because when you go in there, there's an immediate example. You don't have to put in 100 details before you get any examples. And in fact, I was the guy who started this, Martin Lewis, who started this site and made a fortune. I was on his show last week, so I'm giving him a little bit of a plug here. I think he's recently sold this for like millions a couple of years back to moneysupermarket.com or something like that. So anyway, here are the mortgage best buys on the moneysavingexpert.com comparison site. I've put in here, it's based on a mortgage of 320 on 400,000, just to give an example here. And there are some 2-year discounted rates here, 4.43 for 24 months, but this is a discounted, so it's linked to a variable rate, 4.59. Now, some of these lenders you might not recognize, the Furness, the Cumberland. Now, not all of these lenders will lend all over the country. For instance, they might say, well, no, we only lend in the north or in Scotland or in Darlington, so they're not necessarily the best rates around. So you have to just kind of scroll down to really find maybe a major lender here that would lend all over the place, all over the country. But you're looking at some, when you consider that base rates are now at 5%, the Chelsea there, 5.8% until 2028, 24-month discounted rate there, 5.14, and this is based on a first-time buyer deal. Okay, so maybe things are not so bad. If we change this maybe to a home mover, or so let's say a remortgage, then shall we? Let's see, update the results for a remortgage, somebody who's trying to get away from another lender, and you've got similar deals there as well. Shall we look at a fixed then? Let's look at a fixed rate, maybe a 2-year fixed rate, update the results here. Okay, so we're getting some bigger lenders coming up here. The Post Office, 5.49. Lloyds Bank, who incidentally, Lloyds Bank said they want to buy 50,000 properties. Wow. Are they going to be buying the properties of people that owe them money and are in default or repossessed? I don't know. And Lloyds and Halifax are one of the same. They're in the same group of companies. So we've got here initial rate fixed until 2025. That's 2 years. And you can see the monthly payment now is 1977. That's nearly £2,000 a month for a £300,000, just over £300,000 mortgage on a 400,000 property based on a 25-year repayment loan. Now, the government are trying to get lenders to offer an interest-only deal. So let's see if we can find some interest-only deals. Now, a lot of lenders won't do interest-only on residential. So here, look, now this is interesting. Interest-only, the Halifax will lend, but at 6.39%. So it almost negates the value of having an interest-only. Interest-only means you're not paying back any capital, but as you can see, no other lenders will do them. They don't like doing them on residential. So let's have a look then at different deals. We'll look at instead of a remortgage first time buyer, let's see if we can find a home mover deal. Okay, home mover. Right, no deals whatsoever on interest only. So we'll have to change that back to repayments, fixed rates. And again, we're looking at the same sort of deals as a remortgage there. So yeah, you can get these deals. Let's look at a 5-year fixed, 2-year fixed, 5-year fixed. Now you need to look into these deeper, because when you get into them, they might say, well, we'll only do this or we'll only do that. And this is why you often need a mortgage broker to sort out the wheat from the chaff and like cut through all the headline rates that may not be suitable for everybody. There might be a huge fee with it. Maybe they want to only lend to certain kinds of people. Occupations, for instance, their figures might, their criteria might be very tight, so it won't suit everybody. But we've got 5-year fixed rates here, 5.24, 5.27, 5.28. You know, now these are huge fees are added on as well, £2,000 fees here. So sometimes they make up the deal by charging a high fee. And you see here that the APRC, what's this? The APRC will give you a total costing. So when you work out, it's a 5.28 initial rate, but the APRC, or if you take into account the fees, you know, £1,300 fee on that, this makes up the total cost of 7.3%. Whereas you look here underneath, 5.29 monthly repayment, no fee. I don't know why they're offering a zero fee, and you see the APRC comes down here. Okay, that's fixed until 2028. So yeah, okay, so that gives you an idea, which is not so bad considering that you know, we're looking at a base rate at the moment, a base lending rate of 5%. And then we can look at maybe a tracker deal. A tracker deal is obviously popular when rates are low, but you know, a tracker deal is tracked to the base rate, or their base rate, in fact. So you know, there's some deals there as well. Now the question is, should you, if you're coming up as 1.8 million people are coming to the end of a fixed rate this year, should you fix for 5 years? Should you just bite the bullet and fix for 5 years, or should you go for a 2-year fixed? Some people say go for a 2-year fix and see what happens at the end of 2 years, because rates might come down, but then that's a bit of a gamble because you don't know if rates are coming down. Don't forget that the Bank of England said that inflation was transitory, which means it's temporary, right? They said that a year or two ago, and of course it's not. They got that wrong. They have these moving forecasts, which means they can change it as they go along. So I wouldn't rely on listening to the Bank of England. Okay, so let's go back to a 2-year and see what the rates are. And bear in mind, we can get a 5-year fixed at just over 5%, but 2-year fixed are actually higher than a 5-year fixed, right? Which is interesting because 2-year fixed were always lower than 5-year fixed. Now they're higher, and they have quite hefty fees as well. So 5.69 there with Santander, with a £2,000 fee. Okay, no, sorry, a £1,000 fee. That's the cost per month, a £1,000 fee. So yeah, okay. Just giving you an idea there. So if you fix for 2 years, you could then see if rates would come down, you know, after that 2-year fixed, and then maybe switch into something else later on. Of course, we don't know here what the redemption penalties are, so we don't know the whole details of this, right? So we've just given you an idea here of what APRC means, previously known as APR, annual percentage rate, and APRC is the official cost for comparison. It's calculated using the average cost per year, including fees associated with the mortgage, but it assumes you keep the mortgage for the entire term rather than just the initial period, and that the interest rates charge never changes. Okay, so most people will never actually pay this rate. They'll switch deals several times before the mortgage is paid off. For further reading, see Martin's Why Mortgage APRs Are Meaningless blog. Okay, so that gives you an idea there. So I hope that's given you a taster for what's going on in the market. Now they don't give comparisons for buy-to-lets here, but we could search buy-to-let deals, mortgage comparison, buy-to-let, because there's a lot of buy-to-let landlords out there that are looking around to switch. So Money Supermarket, see, again, you have to go through a lot of waffle to get through their rates here. L&C, compare the best buy-to-let mortgage deals. Will they give you some deals? Yeah, here we go. Accept all cookies. Okay, maximum loan 75%. And you've got the Mansfield. Now, I don't know if they lend all over the country. Land Bay 4.99. And you see the fee here, £9,484. A fee, £9,484, because they're given a loan at below the base rate. So they're charging this fee. And what it enables them to do is give it a loan, and maybe you can add the fee to the mortgage there. So TSB, right, Virgin Money 5.06, a £4,000 fee there. Land Bay again, Virgin Money. So there's not many here. I mean, but BM Solutions, £4,000 fee here, 3,998, with a 5.13 fixed rate for 5 years. Okay. More deals here. The Mortgage Works, I've used them myself. Again, fixed to 2025, £4,000 fee. So, okay, so some people might say, well, let's add the fee to the loan, and we'll go from there and worry about it later on. Now, as I said, this is based on, I mean, this is based on the house price 250 and borrowing 125,000. So that's a 50% deposit there. So if we maybe increase the borrowing to maybe something a bit more realistic, let's try and put a higher figure in there, say 200. Let's say 180. Okay, so what we get here based on a higher loan to value. Okay, so we've still got some deals in there. Land Bay again, 4.69, but with a £9,000 fee. Wow, that's fixed for 2 years, by the way. Okay, so that doesn't look too bad. When you think, of what some people are facing. Monthly repayment there, £1,000 a month for that loan. It does seem high for a £180,000 loan. So let's have a look on interest only. Mortgage term. I'm just going to give it to you. Deals. Let's change this. Yeah. Repayment amount. Okay, so we've got a deal here. Borrowing 200 on 250, interest only. Again, the rates are higher. Look, 6%. Why are they going 6%? Oh, because I've changed the amount of mortgage as well. So because you're borrowing a bit more in loan to value, the rates have gone up now. Look, 5.34. The Bath building site, I don't know if they'll lend all over the country. Accord mortgages, 6%. Lower scheme fee there. Okay, so this is why it's useful to have a broker, because they can cut through all of this stuff. That's a precise mortgage here, 5,400. So you've got a big fee there, 1,300 a month for a fairly small mortgage. I mean, you're only borrowing 200,000, and you're paying, on that precise mortgage, £1,300 a month. Again, you've got to look into the deals initially, because the brokers will say, well, okay, what's the rental income? And then when you start putting in the rental income, what type of properties? Is it a HMO? Is it a standard buy-to-let? Have you got a clean credit history? All these things come into play, because the lender will look at the rental income, and obviously the rental income must exceed the interest payment, otherwise they're not going to lend. So yeah, you could see you could look at that mortgage amount and say, yeah, that's great, but will that lender lend based on the rental income that you're achieving? So all of these things come into play. That's why you need a broker. So if the rental income is lower than the mortgage repayment, they're not going to lend that amount. So people coming out of a mortgage deal where the rent has stayed roughly the same, but your interest payment has suddenly jumped up, how are you going to remortgage? How are you going to get out of that deal? How are you going to even move on to a new product? And this is what is going to be a problem for a lot of people. Okay, so that's the end of the update for today. Don't despair. Always get expert advice. and try and get the advice early rather than leaving it to the last minute when you may be in trouble with your mortgage, because the last thing you want to do is get into mortgage arrears, and then it's very difficult then to switch lenders, and you could be in a situation where you end up in default, then you get into bad credit history, and even worse still, where you're being repossessed or having to sell the property fast at a lower cost than you would want to. But I know, another solution maybe if you've got more than one property is to sell one and pay down the loan on another. So that there are all these things you've got to think about when doing this. So I'm sorry, it's not all great news there, but I'm trying to give you some solutions as well in there. Now, if you're a residential mortgage and your mortgage has jumped up, I mean, I showed you a headline a couple of weeks ago. Yeah, our mortgage was $400 a month. Now it's $2,000 a month. Not uncommon, when you think of, residential buys are on a fixed rate of less than, say, 1%. That's jumped up to 5.5%. It could easily go up by 4 times. Now the government have asked lenders to try and go easy on people and give them options like switching to an interest only, which would bring down their repayments. But we'll have to see what they should do, what they will do in reality. They should be doing this anyway. But another solution may be to look at the rent-a-room scheme, where you rent a room in your house. It's not a buy-to-let because you live in that property, but you can get up to about £7,000 tax-free. I think it's £7,500 tax-free under the rent-a-room scheme, and that could make a big difference to your mortgage payments. Now, not everyone recommends this, but I'm saying look at this as a solution to get over that initial problem. Now, obviously, people might say, well, I don't want to share my house with somebody, but this is what you might have to do. I know people that have saved their necks using this type of thing in the past when rates were even higher than they are now. So why not look at that as a possible solution? You can also rent out your parking space. There's websites where you can put your parking space on these websites, and people will rent out their parking space. Obviously not if you're in the middle of nowhere, but if you're in a town centre or you're near a station or you're near a place of work or a school, and people might want to rent your parking space out for 50, 60, 70 pounds a month, that could also bring in a little bit of extra income for you. So thanks for listening, and I hope that things will get better, that rates will eventually come down. But for the time being, the Bank of England are saying that there is a possibility of further rate rises, and that the base rate could go from 5 to 5.5 to even 6% before things come down, because they've messed up the economy and inflation is not under their control at the moment, this transitory inflation. So until they get that under control, which was largely caused by money printing, the people are all going to have to suffer in the meantime with higher interest rates. So sorry, it's a bit of doom and gloom, but that's the way it is. I've got to tell it like it is. So lastly, if you do need help with money, you want to learn more about how to deal with money, how to save money, how to invest money, how to get your finances under control, do look at my free webinars. And if you are interested in property as well, then have a look at the link below, because there is a free course coming up on property investment, which may, even if you're already in property, I think it might be useful to look at this, to look at your options, because a lot of people think just buy to let, but there's lots of other ways of investing in property, lots of other ways of using your property. For instance, if you are letting your property on just a straightforward buy to let, could you look at serviced accommodation? Could you transfer that, adapt that property for serviced accommodation and maybe double or even treble your rent? Now, you might be thinking to yourself, oh God, no, serviced accommodation, no, that's a lot of work, isn't it? I have to go in and change the linen every week. No, there's people who will manage this for you on a systemized basis, so that your property is just managed by them. You get more rent, they make a profit, you make a profit, and your property is rolling along, and you're paying your mortgage. So have a think about that. If you're interested in that and you want to know who can manage these sorts of things for you, drop me a line at charles@charleskelly.net. I'll see you soon, and bye for now. Have a great day. Bye for now.